Eric Mwather with another Uniformity video. We are going to be taking a look at 4 examples in the current market, being November 4th, 2014, just to see how the uniformity principle could have helped you stay out of these stocks that overnight they have been called lower, and here in the first half hour of the day the stocks are down. So just want to show you how the uniformity principle could have warned you of impending down action. So we go with Michael Kors, K-O-R-S, and you can see that the stock was trading here at about $77.88. You go back to the previous high and find where the RSI broke down. So the RSI made a high somewhere there, and once it broke below this RSI level, the stock fell here, and since then it's been down. Okay, so we know that for a fact. So we draw a straight line from the ideal sell point, which would be something like that. You can see we've come to the line a couple of times. We did so here, which was a short-term high. We made a double top there, as you can see, double top on that line, which gave you nice sell signal or a reason to get out of the stock. We've come back here over the last 3-4 days and made a double top. So coming into the session today, this is what the chart looked like. So I'm going to show you what has happened overnight, and we see that now the stock is down almost 9% because it gave you resistance as of yesterday's close with a double top. And that's my reason, or at least my explanation, as to why the stock has not done well overnight, because of that sell signal coming from the uniformity, because you have uniform activity with double resistance at the line, and that's your sell signal. Let's go to the next example. Take a look at Discovery Communications, DISCA, and here is a stock which was already bearish. Why? Because it had broken down below previous support. We have the moving averages trending lower, so lots of negative energy, and we see that this high, there was a break of a trend line somewhere there. So this break and a sell signal was responsible for this break and this price action lower. And so we know that this was the break. We draw a straight line, and here in the last 4 or 5 days we already see a sell signal. So the stock had already given you a sell signal coming into the earnings, which was more like a risk trade, because with a sell signal already confirmed, the stock could easily drop. So we see that overnight. Now go to the current chart, we see that the stock is down 7.5% just because it had already given you a sell signal from the previous break point being confirmed as resistance there. So uniformity played a part in telling you to be careful that the stock would easily slide lower. Let's go to Herbalife, which as of yesterday's close looked like it was breaking out, and somebody could have argued that it was poised for a good earnings session. So it was breaking out there above the previous recent daily closing high, so anybody playing long side breakout would have gone long there. The only problem with the stock is previously it had broken below here, so we draw a straight line, and that line, if you look here, this break of that RSI trend line is where we have the 52-week high on the stock. So we know that that was a major break point for the stock. Since then it's come down. So using that information we can find out where the stock turns around. So a couple months ago we had gone short here because we had seen that the RSI had come back to that line and formed uniform action. Now it always doesn't have to be uniform action as resistance, but that just tends to be your best sell signal because it's 2 times confirmation of resistance. Hope that makes sense. So we had seen that and we had gone short, but my point is, as of the close of yesterday, you see that the stock had come here, hit that level once, stalled, broke out in price, but the RSI was still within a reversal signal. In other words, anybody aware of the uniformity principle could have been aware that very easily this could turn into a reversal, confirming resistance at the line. So this was, to me, on hindsight, a trap. I'm not saying that I would have played it short, but I'm saying on hindsight we can learn that sometimes stocks do set up to confuse, dumbfound investors before they move in the actual direction. And my point here is, because we had already seen the break line, we know the break line is somewhere there. We know that if this turns into reversal, that's a sell signal. Okay, because you can even see that every time the stock moves below the line here, you get a short-term move lower every time. You get a short-term resistance. The stock doesn't go any higher. In fact, even you can see from this sell signal here, you had a short spike lower that brought you back to this general area, here, and which was close to double top. So my point here is that because the stock, this is what the chart looked like as of yesterday, as the stock went into earnings, you have to be aware the possibility, it's just a possibility. Remember, in the market we are playing odds, that this could very easily become a sell signal. And so we come to the current chart. After the market action, you can see the stock is down 13%, confirming what I was saying. The risk was there that resistance could turn, and it could be confirmed on the line with uniform activity above the line and a sharp V-type formation back below the line, confirming resistance. So this breakout here was a trap. And by understanding how the RSI responds to the previous breakpoint, and the breakpoint was here coming off the highs, every time the stock comes to this level and shows resistance, you have to anticipate a reversal signal, and this is exactly what happened. So anybody who bought the breakout here without considering the uniformity principle might be wondering what happened, but the uniformity principle was always there if you understand it, showing you that this could easily become a trap, and it turned into a trap. Let's go to one more, which is price line as of yesterday's close. This is where it had closed down about 0.6% lower before the earnings, and it had come back to the 200-day moving average and seems to have stalled as of yesterday's trade. So that was an initial red flag. Okay, but we know that this is the high. We know that for a fact because the stock is off the highs. It's never gone back to those highs. And so we figure out where it broke down, and we can see that the breakdown was somewhere here. If we take that low and this node, we draw a straight line, and just should be somewhere there. And you can see previously we've seen uniform activity above the line, back below it, which is what? A sell signal, right? Which is this high, and you did get a slight pullback here. You come back here and have uniform activity, double top, all right, which is uniform activity to the line, so it's resistance, which was this highs, and you get this drop. Now, as of yesterday, this is what the chart looked like, and you can see what the stock was telling you, the possibility of this becoming a reversal signal like that was very high. Okay, because you had seen resistance at the 200-day moving average. The stock itself is coming back to a previous sell signal point. You have to be careful. In fact, there's another way you can look at this as a secondary sell signal was coming off these short-term highs, not 52-week highs, but short-term highs, and you find the sell signal, which is here, and draw a straight line. You see perfectly that the stock was showing resistance before earnings at the previous breakpoint, and this breakpoint here was responsible from this move lower. And so that coming into earnings, if you own the stock, you knew that there was a risk if you understand the uniformity principle. So let's go to the current chart, and you can see the stock is down almost 80 points and down about 6-7%, because now what we were talking about as previous sell signal has been confirmed with the uniformity. The stock itself has come back to that point and shown resistance. So the uniformity principle, which is my point here, can help you gauge the risk of a stock, especially if it comes back to a previous sell signal on the RSI. Eric Mwathe, good luck, peace, and blessings. Woo!